Hi, my name is Bob Whittlesey. I'm a partner with Colliers International Denver, here today to talk a little bit about the Northstar Integrity Growth Fund. Robert, Brian, why don't you do me a favor and spend a minute talking about yourselves, introducing yourselves to the group.
Sure, go ahead, Brian.
Well, I'm Brian Watson. I'm the founder and CEO of Northstar Commercial Partners. I founded the company 20 years ago, and we own assets in 15 states throughout America. Our focus is buying vacant and distressed properties as well as value-add properties. And we're extremely excited about this fund with Robert and the Integrity team. We've done 38 transactions with each other over the last number of years, and they have been so impressed with these returns, they decided to launch this fund with us. This fund is focused on 75% value-add assets and 25% income-generating assets. And we've already identified 5 different assets that need about $50 million of equity. With that, I'd love to have Robert talk a little bit more about his team and what they bring to the table.
Thanks, Brian. We met Brian a number of years ago and have done a lot of transactions, he said, together. It's been a great relationship. And how we actually decided to do this is pretty simple. We have a lot of people that look at investing with Integrity Wealth Management, which, by the way, has been around going on 16 years. And they may not want to do one-offs. They might want to do something and be part of something that defers risk a little more. And so in talking to Brian, he and I got together and thought, we've done a lot of deals together, but what a great opportunity to extend those returns to a larger group of people. So for that reason, we put the fund together. We've run several funds before, and it was just a great opportunity for Brian and I to kind of hook up together and to get the two teams to pull forward.
Thanks. That's quite helpful. I guess to get to the nitty-gritty, you talked about your success in the past. What kind of returns are you expecting this fund to throw off?
Absolutely. So especially where we are in this late stage of the cycle, for us it's about cash flow. And as we said, it's about 75% value-add assets and 25% income-generating assets. With that, we're targeting returns for investors between 14 and 18%. Our historical returns from Northstar have been much higher than that over the years. Not that past performance is a guarantee for future success, but we've been very disciplined in what we're doing. And we think it's very realistic to drive high teens, low 20s returns to our investors within conservative risk mean adjusted returns.
Nice. And do you anticipate a particular product type within commercial real estate, commercial properties?
Yes. So this fund is focused on the Western United States because we believe that it has a positive outlook for the future in terms of its growth, demographics, etc. However, we have the ability to invest nationally as well. The main product types we're going to be focusing on for this fund is office properties and industrial properties, senior care properties, and medical properties. As I said, at Northstar right now, we own about $1.5 billion of assets in 15 states throughout the country. So we bring all of that history and experience to this fund and this platform in partnership with the trust company.
I just add to something that Brian said about the returns. You know, if you look at your normal REIT, Bob, the normal REIT that's out there, you're paying someplace between 6 and 9%, 6 and 7%. And since we're able to offer double that plus, we really feel like this is going to be a significant opportunity for a lot of people to get a higher yield, a higher return than they would with a much more traditional REIT approach.
You know, you bring up a great point. You know, one specific characteristic that I want to point out with this fund is that we are offering a very high hurdle rate in that we are offering a 10% preferential return. You know, most funds might be a 6 or an 8. We believe in our ability to perform. Again, not that we can guarantee returns, but we've set that hurdle at 10%. The second tier of distribution is a full return of capital invested by our partners because we want to get their risk and exposure out of the transaction. And then we're taking 80% of the proceeds and it goes to their side of the table versus 20% to the managers.
That's fantastic. So I think one question that begs to be answered is what are the downsides that you see in this type of structure and the Northstar Integrity Growth Fund?
So again, we're in real estate and real estate investments, and you know, economies ebbs and flows. We believe this structure helps to offset risk and exposure by having diversification. Normally at Northstar, you would invest in a single deal or entity. Now you're going to be in a fund corpus that will allow to diversify into multiple assets. In terms of where we're changing as a society right now, the idea of how we touch and feel commercial real estate specifically is changing before our very eyes. So we are usually not a long-term holder in most asset classes because things like artificial intelligence and technology, do we really need a big office building anymore, or are more people going to be working from home? So outside of those normal undulations of change, we offset that risk by being in and out with our transactions. We buy for the right reasons, we enjoy cash flow, and then we sell the asset. And we really believe you make your money on the buy. And that's one thing that separates our company in a significant way. So again, we have the diversification, you have the changing demographics, and I would say the final one is where we are right now with a potential recession. We're actually looking forward to a recession because we believe that'll open up some more opportunities and help us with pricing. And so we're very focused in terms of looking to say, okay, we have the lines off the back of the boat, we're trolling for good opportunities. So we're really looking forward to it and feel that we'll be able to drive even better deals and returns for our investors.
I want to comment about the risk aspect, Bob, because that's very important. You know, when I put on my banker hat, one of the things we're very concerned is making sure that anything we invest in, the likelihood of return is high. Mm-hmm. And so what we did is we did a 20-year forensic scoop, if you will, of Brian and Brian's deals. We've looked at every deal Brian has been in and since the inception of his company. We looked at entry point, exit point, carrying costs, and quite frankly, the returns have been pretty phenomenal. And they've been phenomenal with us for the last several years. So we really feel like we've got a unique product at a unique time, at a unique point in history, and we think we're going to really have some great returns for people.
Fantastic. I love every bit of everything you're talking about right now. So Brian, you touched a little bit on price. Mm-hmm. Do you have a strike price as it pertains to replacement cost?
Yeah.
Is that in your equation?
So yes, absolutely. So when we're buying vacant distressed assets, we want to be 50% or less of replacement cost. When we're talking about these value add assets and income generating assets, if we can get it for 50% or less of replacement cost, that's fine. But most of them are probably going to be 70% or less of replacement cost. And that's a really defining thing, because if you're at a lower basis, you can be more competitive, more patient in terms of how you structure. But I would also look at the size of deals that we're going to be focusing on with this fund. You know, we are usually a hair under where the institutional investors want to deploy capital or need to deploy capital. I mean, several funds now, they have to deploy $50 or $100 million of equity. Well, to get that size of a deal, they're relegated to the core markets and the gateway cities. Because we're going to be focusing on that kind of $10 to $50 million asset, that's our sweet spot. So it's smaller than most institutional investors can deploy or will deploy. There's a lot of economies of scale and inefficiencies in that space for us. And so that's our focus with this fund. You know, we're going to make a really tasty stew with a lot of kind of $10 to $50 million assets and creating that various cash flow and diversification.
Thank you. Robert, a question for you.
Yeah.
Who would you say your target investor is in the fund?
Well, there's several target investors. First is people that are looking for an asset that's backed by something that's actually definable. So that's real estate, as opposed to going in the stock market or something else right now. We think the stock market right now has had a great run. It's been phenomenal. I agree with Brian that we've seen some downturn that likely will come in the next 2 to 3 years. We don't know how or when, but at any rate, we want to be in something that, from a real estate standpoint, that has a very high probability of a great return.
Nice. It does feel like the market is softening and there could be a recession. Who knows how deep it will be in the future. Tell me about liquidity for the investors.
So the investors make a commitment to the fund, and we have monthly closings with the fund. And so once we receive their money, their ticker on their 10% return starts right away. So they're incentivized to get their money in sooner rather than later. We have already identified 5 different acquisitions in 5 different markets that we really like. So they are right now in Denver, in Los Angeles, and in Phoenix, and we also are looking at one in Salt Lake as well. Those assets in total comprise of equity need of about $50 million. So we will then, investors make their commitment. If it's a deal that we decide to do, we will advance the money from the fund into the transaction. As we receive cash flow, we will make distributions back to the investors. And so the goal is to make quarterly distributions. So first and foremost, they get their 10 pref, and if we can't meet the full 10 pref, they'll get an accrue of that amount that's due to them, and we'll pay out that cash flow on a consistent basis. As we continue to lease up the assets or we sell the assets, then they get the full accrual and the return of their capital. We have a 2-year reinvestment period, so if we decide to buy a deal and we reap profits from it, we could deploy that capital into a subsequent transaction. But our real goal is all about cash flow and consistent cash flow to our investors. You know, especially in a recessionary environment, especially in an inflationary environment, people like to have cash. And that's really what this is about. And it's about bricks and mortar. You think about real estate, you know, it always has some inherent value. It may not be what you paid for it, but unlike a stock that can disappear and a company can go out of business, you have inherent value. And if we're buying for the right reasons in the right locations with the right partners, we really believe we're going to drive strong cash flow for a long time.
Well, just in conclusion, Bob, I just wanted to say that in this case, we think 1 + 1 equals 3. And, you know, the way we look at things, we put every deal we do in the fund through the lens of a banker, through the lens of somebody that was lending into commercial real estate. Brian's team over 20 years has been doing this, so we have all the capability of Brian's team and all the process he brings, all the capability of the integrity fund and what they bring. Putting those two things together, we think, is a very unique opportunity for those that choose to participate.
You know, you bring up a really good point. So I personally do not know of another trust company that's done 38 deals with a commercial real estate company over a number of years. And knock on wood, we've been blessed and fortunate to make money on each of those deals so far together that actually partner directly together. And our investment committee for the fund is made up of 2 members from the trust company side and 2 members from Northstar side. Robert and I are on that committee, and there's 2 other members as well. And I think that's a very unique approach. When you think about it, most commercial real estate companies, you know, they're focusing on the real estate and the values they can drive. But you bring in this trust component as well into the voting committee, it's a different paradigm and a different worldview. This idea that first and foremost, we're about protection of capital. Second, we're about making money on that capital in risk-adjusted means and focus. And I think that's a really important component versus just a real estate company wanting to always deploy capital into real estate, what they know.
Right. Well, this has been great. Any questions that you think I have missed or you'd want to expand on?
No, thanks for your time. We appreciate it. We hope to hear from a lot of the folks in your network and help them deploy some capital.
Well, thank you very much. Appreciate your time.
Thanks.
Thank you.